From the morning reading, while the Dow Jones Industrial Average sits at new highs, the Dow Jones Transportation Average is at a year-to-date low. The clear divergence between DJX and DTX is actually not common. However, our review of longer-term charts suggests that the divergence will ultimately correct itself from one of the two indices reversing toward the other. Theoretically, it should be DJX following DTX, as DTX is traditionally leading indicator. While most important to understand, though, is that the divergence does not correct in the short term. It can take weeks for the DJX to follow the lead of the DTX, or for the DTX to get with the program of the broad market and move back in line with it. Don't run out and trade this signal on a short-term basis, but do keep it as part of an ongoing narrative for the broad market and its potential direction in the medium term. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I'll provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:45 a.m. Central Time, and I'm recording this in preparation for the market day, May the 22nd, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Let's dive in and see what happened with the overnight. Let's see here. So, frankly, not much. And all four the U.S. broad market indices, we are essentially scratch at the time of this cut. Now, crude oil, we had a little bit more movement there. It's down about 0.76%. Euro up about 0.5%. Bonds up about 0.2%. And gold up about 0.7%. Overseas, more action. China up 2.84%. Hong Kong up 1.7%. Japan up about 0.3%. Germany, for the only weakness really, the primary markets down about 0.42%, and the United Kingdom up about 0.36%. In terms of macroeconomic reports, we have obviously the holiday weekend. That's probably the macroeconomic report, as it were. A lot of people will be leaving, especially midday, so if you haven't gotten your targets and so forth by about midday, you probably won't before the end of the holiday. You do have CPI, core CPI speaking report this morning before the market opens. And then also do note here, I was just reading ahead, ECB President Draghi speaks at the market open. So that could actually make the market open a bit more volatile. And you also have a couple other Bank of England, Governor Carney speaking, and then the Bank of Japan, Governor Kuroda speaking. So our open could be influenced by these various important talks. So that could add to the market volatility right at the open, above and beyond what is typical. So just be aware that things could be a little jagged, and you're like, well, where's this coming from? It could be influenced by a number of things with those various people speaking. In terms of volatility, look at this, short-term VIX below 10, 9.95. You have, wow, look at the put-call ratio, 0.71. IV percentiles 11, 2, 12, 21, all in the lower quartile. The Russell near its 52-week low level, and certainly S&P and NASDAQ also exceptionally low. In terms of standard deviation moves, we've been very quiet in the last couple weeks. Only a couple standard deviation moves in the S&P. As well as the Russell. You did have a 2 standard deviation move put in one day over a week ago by the NASDAQ, and you're about to have the same age off from the Dow. So things have been exceptionally quiet here in recent trading sessions, and not likely to change today. Perhaps after the holiday, when people return, But frankly, a lot of people will be probably on a week-long vacation next week, so volume could continue to be pretty low unless something comes in to trigger activity. In terms of our regular daily report, not a lot of changes here today. I'm not going to mislead you at all by making something out of what's not there. It's pretty much the same as yesterday. Phase 3, higher highs, higher lows. Portfolio investor postures, IBD status confirmed uptrend, GMI index 6/6. So very strong there. Market posture very bullish. You see all four of the indices, S&P and Dow and NASDAQ, all very bullish now. And Russell, much stronger bull than it had been. We still are concerned by the fact that the NASDAQ and Russell trail. We're also concerned by this activity from the transportation index. And let's just take a quick look at that. We've got plenty of time today with so little happening. But look at this transportation index. I mean, you actually probed the low of the range yesterday, broke horizontal support, did recover, but certainly this is not good. But as our reading indicated, this divergence doesn't necessarily resolve itself quickly. So here you have the Dow Jones broad market index, and it's right there at all-time highs and poking the top of the range. So the fact that these are quite divergent is of note. I also am paying a lot of attention to the fact that the Russell is so much weaker than the S&P. Here's the Russell, and then also the NASDAQ. Near the top of the range, certainly improved in recent days, but not the picture that you see on the S&P. And frankly, usually when the S&P is the leader, that is not good. I mean, you want a strong S&P, but you want the Russell, you want the NASDAQ, you want them to be out front running hard, and those components, so if you've got, growth stocks and tech leading, that makes sense for a strong bull case. But when you've got large caps, dividend stocks, as the leaders, and then you throw on there not terribly impressive breadth, this isn't making a lot of a cause for a significantly higher market and a significantly higher leg to come from all this. So we continue to be quite suspicious of this activity, and it's these kinds of relationships that cause that concern. Hedge warning status is still a 0+, normal with cautionary aspects, and I just outlined probably some of the most important cautionary aspects. Do have a VIX daily squeeze still present, but that can persist. You do have, perhaps more concerning, the skew over a 125. Though just barely. This is a cautionary level. If it was 135, it would be more dangerous. And you have in our risk aversion indicators, one of them has flagged as risk off. So nothing terribly exciting in this. I mean, this is nowhere near the amount of red and the number of warnings that we have seen in recent weeks. So in general, things are obviously bullish, and your bias needs to be bullish until something is certainly violated. Option income strategy opinion: VIX is inside the acceptable window. It's probably actually a very good time to be doing option income strategies. Just make sure that you're taking into account the potential for increasing volatility in your strategy selection. Cover call strategies, also cautiously bullish, looking for an equal distribution between in the money and out of the money strikes. Put selling, also acceptable. Consider credit spreads with defined risk and scaling into positions until we get some stronger signals that this market is going to do something a little bit more pronounced with more legs and more momentum and more energy. In terms of our sector specific, transportation, we just talked about that. Obviously, a lot of weakness there. Telecom, energy, retail, all showing some concerns. Very mixed picture yesterday. And remember, we take a look at the patterns. I mean, our pattern, it was pretty much a go nowhere day. I mean, it was bullish on the SPX, but it didn't really do anything super special. I suppose that is a closing high, so we should note that. Russell, this is basically a doji. NASDAQ was probably the strongest of the day and still has some room to catch up with the S&P, but certainly that was probably the strongest statement of the day. And another doji. So the two indices that had really set recent highs, the S&P and the Dow, had dojis, and the other two a little bit better action, but they're playing catch up. NASDAQ the strongest of the day. So that's probably enough for today. Greatly appreciate the feedback that I get from you, and one of those ways, the easiest way for you to give feedback is to say you like what we're doing with YouTube and hit that like button. Greatly appreciate that. More information available on what we do with this portfolio and options trading chat room membership available at this website. Performance matters, we get that. We're very transparent in how we model our performance. Disclaimers as always, hit the pause button if you need more time to review this. And then of course, we'll see you back here on Tuesday morning after the holiday in the market preview. Thank you.